Here we are, opening bell, 1 minute, 9/4/2012, live. Hey, happy Labor Day once again, everybody. It's over, and you got elections coming, you got all kinds of stuff coming. And what we're going to be watching is where this bull is on this opening bell. This is why we do these trades live. We got low bids over here to buy that 685 put. Yeah, we do below that market. We got lower bids down here at 5.7 in case they want to break this up to a 52-week high. Right now, you got 52,000 shares on that Google trade. Look at here. Everything is turning positive territory. Just remember, it's the first 1 minute opening bell print for the MMT market maker to look at where this tape is going to adjust in a high frequency model. I will conclude the 1 minute, and then I will come back and revisit the price ranges. You can see we have a low of 683.95 there on Google, and the low over here is 665.51 on Apple, and this is all going into a 2 minute opening bell. They slid that bid down here to support right away. We hadn't seen that. These put options are 590. Look at that. Last print was $6. Look at the calls come down in value, $1.80 here now. And remember, the calls had closed up positive territory, and these puts, they're still marked down in value. Okay? Within this opening bell structure with a 2 minute sell bar live in the Dow, and slightly to a degree where you see the Apple, though, it's very strong. It's making those highs in 2 minutes. And this one here, it hits support level, and it's printing right there. Look at that put option, 630 by 680. They're losing that call value because if the calls closed positive, so they're taking the premium out of the opening bell when this comes down to price support. That's all they're doing right here. This one, look at the last print, $6 right here on one. And that's how we make markets. You can make markets at low, but the spread's only 63 cents and $1.10 on the call. So the call's got the wider 9.10, and it's dropping down to the lows of $8. So it depends on where we hit the support level. 3 minutes, I'll conclude it at the later date. We have all the price ranges. We've got how it opened up. We have the high frequency model within the bid and ask in the electronic communication network system. We know exactly where we're at. Here is Google, and we talked about in pre-market this thing coming down to 680. It's the first narrow range. It did not break above the closing high of 685.09. It came right to that 684.96 within its bull trend cycle, and then had a reversal to 680, and then bounced 200 pennies right here in this 3 minute chart. We've been open for 19 minutes, and we were going to update this, and then we have a 34 IR. It's the first time so far in the bull cycle is where we hit that reversal. We come down, and we have a 3 minute bar at support level here, right here in the video. And then this 3 bar comes straight back down. We'll see if it holds that half bar, MMT. This is live. It's right now, 19 minutes, 9/4/2012. Once again, how the put side paid, 590. Notice the puts didn't go below $6. They hit a high of $8.27, now printing at 740. The call side over here from 980 had a 910 high. What does that mean? It means that it's the first time in a long time on the opening bell that we've seen the call side gap down from the close. 980 highs 910. And based on that reversal here right now, we're going to try a market bid at about $5.50. Because one of the things that we're seeing is that IR right here is falling, Mr. Damien, below 35, and this is going back toward 50, just like, and this is live, is it not? You bet it is. And not only that, it doesn't lag the price. See how the red bar comes down, and see the half bar right here? That's going to be that now. It's $6.50 by $7 over here. And it's one of the first times that we've seen this side of the market marked down on the calls getting marked down, and you're finally seeing where these were marked up at 980 close. These were marked at 590. It did not go below the close like I was teaching all of the MMTs. This is when you know when the put to call ratio side of the market, if it doesn't go below that low and it trades higher on this put side with these reversals, and watch that 550 bid take it back down to 4.8. He breaks that low and he goes lower in that delta, we're at 52. If he can go down a full delta, of course these calls can get a whole lot cheaper and these puts can get a whole lot more expensive. Now, I just want MMTs to know it's been 21 minutes on the opening bell on 9/4/2012. And when I say that price volatility will increase, it has to start like this. It's not a huge increase yet, but it's the beginning phases. And the analysis that was done over the weekend has to have confirmations. Remember one thing, they took those premiums out that were positive, and they're down 3.3. This side of the market is going to come down and hit the lows. As we come down and test this half bar right now, you can see we're almost down a half delta, 0.48. Didn't I tell you, Damien, if that goes toward a half a delta, then that bar, when it was there, would come right back down, and you're right here. This is called high frequency diamond alert right here, but it's on a negative ratio. So we're going to see if he comes down and breaks minus 0.60, which would break that low, and that's going to bring these call contracts in value at about $4.80. That would be the volatility side. This side of the market, in the dog days of August, Google made a series of 52-week highs in the last calendar week of August. And when it puts its 52-week highs in, we have shorts on it. We own this monthly 685 put. And yeah, we are holding it right now to see, because it's a monthly contract. This is not a weekly one now. And we were looking for 10 of these within a certain price range. And Google really has to break down for this contract to get back to $22.50 over, let's say, a 7 or 8 or 10 day range. If these markets right now, price volatility changes, the put to call ratio in the short opening bell of September 4, 2012, 23 minutes of it anyway, is that we got a little bit of bull exhaustion in play as far as directional price movements that we haven't seen. Now, when I'm doing this Google trade, we're doing it because what we're looking for is where the IR stays weak. We got negative ratios down. That supports that short. That supports this contract right here. However, what Google has to do is shake people out of the 52-week high and bring it down into the 665 area where Google would have a really great long bounce. But this is the opening bell, and we're going to make our adjustments accordingly to these lows. And we're using that monthly contract, and it's the first opening bell that we've had any significant price changes. It's a verification model that price volatility shall increase in the month of September. Look at the home page there on the website. Type in this last Labor Day weekend training and those videos there. Those were all the trade management scenarios. That's what you need to get a grip with. And where price bull exhaustions get taken into consideration, meaning that resistance level trades $10 down. That means we got to trade down much lower and break a series of lower lows. We only have 73 lows. We have 126 highs on Apple there. I'm going to conclude this opening bell in 20 minutes of the price range right here, right now. Here is the call side that made the lows. They're down the lows. These put options never broke below 590. It's the first time. And as I trained my MMTs, if the put to call ratio sides of the market, that means that you would never go below 590, and it stayed 10 cents above it and made a high here. And it's printing over here on the ask on the high where the calls are down toward their lows on the bid based on that opening bell print right here in Google. How do I get wholesale in the call? And how do I get wholesale and sell the put for a profit? And how do I make my engagements with both parties on the opening bell? 26 minutes. Series of 52-week highs. There is a reversal as it should trade.